Does the thought of financial planning for your practice give you a headache? It's like you know you need to do it, but can't seem to find the time to get it done. If this is you, don't worry, you're not the only one. Managing finances and metrics can be one of the toughest parts of running a business. But here's the good news. It doesn't have to be overwhelming. Hi, my name is Jamey. In today's video, I'm going to share with you 5 essential strategies to make financial planning easier and more effective for your practice. So stick with me because at the end, I've got a bonus tip that could certainly save you thousands of dollars every year. Are you ready? Then let's dive in. Okay, part 1, creating and managing a budget. The first step to financial clarity is creating and managing a detailed budget. A budget is the foundation of your financial health. It helps you control expenses, plan for growth, and avoid the surprises that we know tends to happen. Here's how to get started. List all of your income streams, all the revenue streams, and all the fixed expenses like rent, therapy, and non-therapy salaries, and software that doesn't change regardless of how busy you are. Next, highlight variable costs. These are costs that change as your schedule gets busier. So look for opportunities to remove unnecessary spending. Perhaps there are things you pay for that are no longer needed. You can use software tools like QuickBooks to help automate and track your budget. Did you know that businesses with detailed budgets are 50% more likely to meet their financial goals? To make this work, review your budget monthly and allocate a percentage of your revenue for savings and growth investments. I recommend start with 5% for both until you have a nice rainy day fund established. We'll talk more about that in a minute. A strong budget isn't just numbers on a spreadsheet. It's your map to profitability. Now, let's tackle cash flow management, another area where practices often face significant challenge. So part 2, tracking and optimizing cash flow. You see, cash flow is the lifeblood of your practice. Without proper management, even profitable practice can run into trouble. So here's what you can do. You want to separate your personal and business accounts, especially when you get started. It can get really confusing having money go back and forth for personal and business use. You want to keep your tracking nice and clean. Review profit and loss statements. Do this monthly to identify trends and areas for improvement. Review cash flow metrics. Utilization, revenue per visit, accounts receivable are all important metrics to keep an eye on weekly. Studies show that practices who systematically review their cash flow experience 30% less financial stress. So to keep things smooth, set aside a cash reserve. I recommend at least 3 months for slower months and to also automate bill payments to avoid late fees and get back precious time. So mastering cash flow ensures your practice runs smoothly, even when things get tough. Part 3, managing debt effectively. Debt doesn't have to be this bad, scary thing, but it must be managed wisely. Mismanaging debt can weigh your practice down, while small debt can fuel growth. So here are my top tips. Consolidate high interest loans to lower your payments. Focus on paying off high interest debt first. You want to regularly review your loan terms and renegotiate if possible. Practices that manage debt effectively see an average of 20% boost profitability. Hey, working with a financial advisor to create a debt repayment plan can make all the difference. Once debt is under control, you're in a great position to invest in your practice's growth. So let's talk about that next. Part 4, investing in growth. Strategic investments are what takes your practice to the next level. Whether it's marketing, staff training, or technology, every dollar you invest should have a purpose. So here's how to get started. Allocate funds for upgrades that directly impact patient satisfaction or efficiency. Efficiency always equals profit. Assess the ROI or return on investment for every dollar you spend. Don't fall for the shiny toys that are inundating your inbox right now. Be clear in what your ROI is. Start small. Simple tools like scheduling software can make a huge difference in doing this. Practices that reinvest just 10% of their revenue into growth see higher patient retention and satisfaction. Investing is exciting, but we also need to prepare for the unexpected. That's where an emergency fund comes in. Part 5, building a rainy day fund. A rainy day fund or emergency fund is your financial safety net. It keeps your practice afloat when the unexpected challenges arise. And let's face it, they always arise, like insurance payment delays, economic downturns, or natural disasters. So here's what you need to do. Save at least 3 months of operating expenses. That sounds like impossible? Start with 1 month. Automate savings into a dedicated account. I personally like to follow Mike Michalowicz's Profit First model. Automating profit, owner's compensation, savings, and taxes. Putting these all into separate accounts. And review your funds regularly to ensure growth with your practice. The larger you get, the more you're going to need in rainy day funds. See, a rainy day fund helps reduce stress and provide security when life throws you a curveball. Start small. Save about 1 to 3% of your monthly revenue. Now, we've covered the essentials. It's time for my bonus tip, one that could actually save you thousands every single year. So here it is. The bonus tip is tax planning for private practices. Taxes, we all have to deal with them, but smart planning can minimize their impact. So here's what you can do. Get yourself a good CPA, someone that actually understands healthcare private practice, not just some run-of-the-mill that's going to do the minimum. Automate, if possible, your quarterly tax payments. You do this to make it easier and to avoid any penalties. You can use software like Expensify if you need help organizing your receipts and other expenses. You see, private practices that proactively plan for taxes save an average of 15% annually. That's a lot of money. By creating a detailed budget, optimizing cash flow, managing debt, investing in growth, and building an emergency fund, you're setting your practice up for financial stability and growth. Even starting with just one of these strategies today can have a huge impact for you tomorrow. So if you're ready to take your financial planning to the next level, click on the description below to set up a call with me and see how I can help you with these strategies. And if you like this video, click on the next one right up there, where I'll share 5 practical strategies to reduce burnout and improve your work-life balance. Thank you so much for watching, and I look forward to seeing you next time.